Hello, everybody, and thank you for joining me today. It's Allan Laboucan with the Rocks and Stocks News Show. Excited to have a new sponsor of the reports to talk about in generation mining. What makes this company very interesting is they have a feasibility study on a palladium and copper project in Ontario, close to infrastructure. This is a developer that's kind of covering both sides of the energy equation for automobiles. Jamie, thank you very much for joining us today.
Thank you, Alan, for having me and Generation Mining to talk about our project. Thank you.
Why don't we start at sort of a big picture view of the company? Jamie, tell us a little bit about the story.
So it's a relatively new company. I guess we're about 3 or almost 4 years old. Previous company was called Pine Point Mining. We had sold that asset, which is a zinc asset, Northwest Territories, to Osisko Metals. We got a spin out of that company, and we liked zinc back then, and we're looking for another project. My chairman and I, Kerry Knoll, we're the founders of this, and we're looking for another project. And we were looking at certain commodities that were undervalued, and we thought palladium was undervalued. So we found this project from Sibanye, and we purchased the project from Sibanye in 2019. And since that time, we put through a resource, we updated, we did a PEA, we've done 2 feasibility studies, we've already received our environmental assessment. We sold a stream to Wheaton Precious Metals for $240 million. And we just announced last week some term sheets and mandate letters from your syndicate of banks for $400 million US. So we're well along. We've done a lot in 4 years. And next step will be a construction decision, which we hope will be in early next year or later this year.
So let's talk about the commodity a little bit. Palladium, important in catalytic converters for internal combustion engines, and copper, important for everything. It's very critical for the electric vehicle revolution in addition to, industrializing the world, rewiring. A lot of the developed world need to move to that electric vehicle revolution. You need the copper to get the energy to the automobiles. So you kind of got both sides of the coin. Heads you win, tails you win.
Yeah, well, I mean, it's nice to have that sort of inverse relationship. Again, we're hoping that they both win. And I think the biggest win would be, what we're seeing out of China is that the biggest growth is not the battery electric vehicles, it is the plug-in hybrids. And so those still require the catalytic converter, and they also require copper, not as much as a full electric car, but it still requires a lot of copper. So, I think the plug-in hybrids are around 7 grams on average of palladium required or platinum required. And the regular internal combustion car is 5 grams. So, so win either way if we go to the plug-in hybrids. Copper, obviously, I saw an article today in mining.com that there's just been no development for projects. It was a good article. I suggest everybody read it. And then palladium, the supply is coming out of Norilsk, which never got sanctioned after the crisis in Ukraine. So the palladium's still coming out, but they're not getting imports to provide expansion, which they had suggested they're gonna start. And so that got deferred or delayed. And there's lots of issues in South Africa with Eskom and the power. The load shedding is getting worse and worse going through the winter months down there for them. So I see the supply of palladium certainly going down, and hopefully the demand will go up pending no recession happens in the world. So I like the commodity mix here. I think we have a project that's as you mentioned, could be win-lose or win-win, and we're hoping for a win-win solution.
It sounds like that's what's heading for these two vehicle uses of the metals that you're focused on. you know, like you said, in South Africa, they have energy issues, Russia, you know, sanctions. And I think that the world that is evolving is that you need stuff in mining friendly jurisdictions that don't have these issues. Canada is right beside a big market, and I think that that's crucial going forward, Jamie.
I agree, and I mean another usage I was just reading up on the other day was that I guess palladium is gets used a lot in the semiconductor. So there's other usages as well, like whether it be I think there's a company called Lions, which is trying to find a palladium anode battery. But you know what I was reading interesting is there's lots of talk about AI and I guess that the semiconductor needs to cool down, and supposedly the palladium and platinum is a great catalyst to cool down the computers. And if we are going to go into a world of AI, which I know there's lots of hype about AI, that they're saying that the PGMs and in particular the palladium would be used as a good catalyst to keep the computer cool so they could use all that memory that's needed. So, you know, if it's not just in the current internal combustion car or the hybrid car, I see other demand for palladium out there. I mean, there is not much supply per year. I think it's around 7 million ounces per year. You know, so there's other demands other than just the catalytic converter and the hybrid cars. So looking forward to some of these new inventions out there as well.
And you know, we talk a lot about copper, and one of the big arguments for copper being bullish is that you've got long-term underinvestment in development and exploration, having success to build mines to feed the demand that's coming. Palladium is in a very similar story. You've got the if you need all the production plus the recycling, and you're still running at a slight deficit that looks like it could become even more of that in the future. So both of these have good supply and demand arguments.
I totally agree. And you know, there's just too many quotes out there, you know, that, you know, from Bristow at Barrick to Freeland to you know, to Glencore. There's just not enough copper projects that are out there. So hopefully they can come on. But I think I've read it was 13 or 15 years from exploration to development. And I know Canada is trying to expedite the time for permitting, but there's still lots of environmental issues that companies need to make sure they have on side, whether it's sustainability and certainly relationships with the First Nation communities, which we have at our company. And so these things you can't rush. So there's going to be a huge lag here. So there's going to be a huge supply crunch coming on copper and palladium as well, I believe.
Okay,
not
so
enough projects. Sorry, go ahead.
We touched on the markets. Now let's touch on your project, because, you know, accessibility, you know, plays a key role in developing any project anywhere in the world. And you guys are right beside the town of Marathon. You got an airport, roads, power. You've got everything needed to expedite the development of the project.
Yeah, it was when Carrie and I went for our first site visit up there, and Carrie had been there, I guess, around, I guess, 40 years ago. I guess when Hemlo was discovered, he was at the Northern Miner. So for him, it was a lot of reminiscing. But we went to the town. We met the mayor the first time. Very supportive of this project. The whole community is supportive. We did get a community benefits agreement, which is similar to an impact benefit agreement with our community of Bidagond-Nishnabeg, which borders the southern part of our project. So we got consent from them on our CBA. We certainly have the support of the town of Marathon. There was a pulp and paper mill there that got removed about 10 years ago. So the town is very eager to have this mine built. It's going to create a lot of jobs and economic sustainability and profit for the community. And so they require, or will probably need, this project to go ahead to keep that community going. Hemlo is just down the street, about 30 kilometers away, but Hemlo seems to be somewhat winding down. I mean, there's still they're still producing, but you know, I don't know how much longer Hemlo has left in it. But infrastructure is great. That power line, that power line just got upgraded from the Ontario government. More than enough power to supply the project. It's clean, it's carbon free. You know, we check all the boxes for the ESG funds. We have a road right to the project. The workers would be more than happy to, you know, they take their own cars or we'll be busing them in, but they can almost ride their bikes. It's only about a 10-kilometer bike ride. So we got everything there, and it's a site visit that, you know, you sit on the Trans-Canada Highway and you'll see our project. So it's pretty remarkable to have all this right there.
And that really checks off a lot of boxes, because a lot of, like you were talking about South Africa and their power problems, intermittent power problems that are, I guess, getting more intermittent more often. And then you've got Russia as a major source of palladium, and then you look at the copper projects all up in the Andes and difficult stories, and that energy source right on your property is pretty huge. Tick of the boxes.
Yeah, for sure. And what's really remarkable about our project as well is that, well, you know, we do have, like a lot of companies, a large exploration potential. This project hasn't really been looked at for the past 15 years. It was acquired by Stillwater in 2010 by a developer called Marathon PGM. And when Stillwater took it over, they were just looking to build it. And in 2014, they had some issues with their board, and the board threw out, with the management, the board threw out their management. And so the project got put on care and maintenance, and Sibanye came in to purchase it from Stillwater. And so over the past 14 years, 13 years, only about 20,000 meters of drilling has occurred, and the majority of that is around the deposit. So we have 220 square kilometers of potential. The project's only on a 3-kilometer pit right now. So there's a lot of upside here. And the previous operators had only looked at it for PGMs because that's what they're focused in on. There's a huge base metal potential here. We're right on a complex here, a Caldwell complex. And, you know, once we get this thing fully financed, we're going to be doing a big exploration potential. And I think possibility of finding more copper or other base metals is highly possible. I mean, exploration is risky, but we like to get in there and do some. But, you know, right now the money's earmarked for developing this project.
So you really, for the governments are talking about the critical metals and the promoting and helping. You guys are answering all the questions that they would want as well.
Yeah, we're getting really good support. I mean, we went through the highest standard of environmental assessment a company can go through last year. It was a joint review panel. So we received our EA November 30th, and the timing just seemed to be right because that's right when, you know, I mean, obviously, the crisis happening in Ukraine and Russia. And I think the budget for Canadians was they earmarked $3.8 billion towards critical metal projects. Some of it was going to more of the upstream, the processing side, and some of it was going to hopefully downstream like us. And so we're trying to tap into that funding source. So we're getting support from them on the permitting side, and now hopefully we'll get some support from them on the financial side, whether it be loans or grants or whatever they're looking to do. But they're giving money to Stellantis, they're giving money to GM to build all these big processing plants. And, you know, what we keep telling them is, well, you want these plants, where are you going to get the metal from? It's in our backyard, so you got to help us out. So I think they're finally realizing that, you know, as Friedland says, you know, the ham sandwich doesn't come from the fridge. So the government's finally realizing that you're going to need mining if you want to have the processing and the manufacturing sides.
Yeah, and you know, I think that it's lost on a lot of people sometimes, Jamie, that to have these things needs mining. All these great things that everybody wants. But the other thing is that with the the world we have now, and currency wars and trade disputes, and I think that our world is about to get smaller in the sense that manufacturing closer to home is going to become more and more crucial. And you guys have the biggest market right very close to you. So, you know, I think that localizing phenomenon is going to pick up, and having something that is needed close to home, I think is very exciting opportunity.
Yeah, so going back to the government, there was our parliament in Canada. They had talked about our project. I guess the opposition leader had said, "Well, you know, you haven't. It takes 25 years to build projects." And then the Liberal government said, "Well, we just approved two projects, which is the James Bay Lithium project and our project, the Marathon Palladium Copper project." So we're one of the two projects that's, you know, getting developed critical metals in North America. I don't think anything in the US is getting developed anytime soon. You know, PolyMet's got their issues, Pebble's got their issues with the environment, getting that going. So, you know, it's nice to be kind of up here, and I don't want to say we're leading the pack, but it's nice to have this project because there's lots of eyeballs on us, and there's lots of support from, hopefully, like you said, to keep this metal in our country, and whether or North America close to home.
And as those eyeballs are attracted, I'm sure they're very attracted to that feasibility study that you guys have run. 26% IRR is a very nice number to be at. And you've got some juice in there if you get higher palladium and copper prices, which I definitely think we're getting higher prices for them. Why don't you give us some of the highlights of the feasibility study, Jamie?
Sure. So this feasibility study was our second feasibility study. My CEO likes to call it an updated technical report, but I think we would lose some eyeballs, so we called it an updated feasibility study. And the reason why we updated it was our original feasibility study was in 2021. And we do lots of marketing. Everyone would say, okay, COVID hasn't been kind to pricing. How much escalation did you get in your capital, in your capex? So we were anticipating somewhere between a 20 and 30% increase. So we decided, the board and the management, to update our technical report or feasibility study. We came in about 25% higher from the 2021. But the difference between this feasibility study and the older feasibility studies, we'd already completed about 42% of detailed engineering. So we're a lot further ahead than what other companies, when they put a feasibility study out. We did do some geotech drilling. You know, we did some infill drilling, you know, and we're a lot more certain of our capital numbers than we were before. So our feasibility study had a capex of just over 1.1 billion. Our net present value after tax is 6% was 1.16 billion. Like you mentioned, our internal rate of return is just over 26% or 26%. But what's interesting is I look at the payable metals. It's 166,000 ounces of palladium, 41 million pounds of copper, and 38,000 ounces of platinum. Those are all critical metals. If you put those all together, palladium equivalent, it's about 283,000 ounces of palladium equivalent. So if you compare that to gold, which, you know, they're not trading at the same prices, but if they were, that's a pretty big gold project, 283,000 ounces of gold a year. And copper equivalent, we're just under 140 million pounds of copper. I mean, again, these are, you know, depends on pricing, but that's a big project. And I don't think people recognize how big of a project this is, you know, and what's most important about our feasibility study is the short payback. So depending on prices and our capital, it's just under 2.5 years. I think it's about 2.3 years. So that's why we're able to get Societe Generale, ING, Export Development Corporation of Canada. You know, I love private equity funds, but, you know, their cost of capital is, you know, mid, high teens, maybe low 20s. Like, we're using commercial banks. So, I mean, they're obviously, interest rates have gone, but we've got some really good interest rates compared to our competitive groups. And the reason why they like it is because of our short payback and the profit that we're making here, or potentially making. So quite happy with where we're at on that study. You know, it's a nice project, and it's not gold. And I love gold, but it's good to be in a different space right now.
Well, to put it in the gold context, which might help a lot of the audience,
Yes.
you know, I want some structural problems that I see happening with the gold space is when we had that 2001 to 2011 bull market, it basically decimated the mid-tier, the middle of the the sandwich, if you will. There was your big, and then there was your explorers. And the industry is in need, not just for gold, but in across many metals, more of those middle tier companies that, and it opens up tremendous opportunities for those companies because there's not enough of them. You know, there's not always giant projects that the majors can that move the needle for the majors, but they're company builders. And it sounds like that's exactly what you guys have.
Yeah, I can't speak for the majors, but it's like you mentioned, it's nice to be a mid-cap developer, and there's not many of them right now. I know there's a few gold companies, but I haven't seen any base metal developers out there, single asset. I know Copper Mountain was out there, and they just got acquired by, I believe, Hud Bay. But you just don't see many guys, or at least in the Canadian North American market, that are going for it, and we're going for it. We want to build this project. You know, we're proud Canadians, and nice to have a project just north of us, in Canada, and supporting critical metals for the North American market, or you know, the even the European market. We want to do it. Obviously, we want to make money for the shareholders, and for ourselves. But I think it's nice to have that in our back pocket, and you know, I not have to rely on Russia and South Africa for these critical metals that are needed.
And you've done some interesting stuff on the off takes and streaming deals that are quite impressive as well, because those guys at Wheaton River, they're Wheaton Precious Metals, it used to be Wheaton River, now Wheaton Precious.
Yeah.
Those guys are really sharp guys, and they know they want a stream that's long term. They don't go into things for the fun of having a stream. They want that stream to pay off over the long term.
Yeah, so we were undervalued back in the day, like we are now, or even more undervalued. And we were looking to raise a little bit of money. So we didn't run a process, but we had a few groups interested in private equity, royalty, and streaming companies. And the deal was with Wheaton Precious was by far the best, and it was we sold less than 5% of our revenue, call it 22% of our platinum and 100% of our gold. They give you a buyback of 18 or 20% on that, for $240 million. We've drawn down on 40 million so far. The other 200 will come on construction. But needless to say, Wheaton has been an amazing partner. They came up to site. The due diligence that they did was incredible. They had core boxes that were unmineralized. You know, they're looking for missing core. We found the core. They wanted some pulps. They're a smart bunch of guys, and that kind of is another stamp of approval that we got from them to be partners with us, to for them to give us that much money when our market cap was 150 or whatever million it was at the time, to get that stamp of approval from the leader in what I think is the best company or best run company in mining right now. You know, I think it's just again another stamp of approval, but it was great to have them as a partner. I think they put out their own reserves on the project. They did lots of homework on it, so it's nice to have them on our side here. So
Awesome. And I want to leave it on one important note that, you know, I think that all investors in this space should understand the Lassonde curve. Okay, you've got two big moves in the Lassonde curve. One is on exploration success, then you go through the development discount window, and then there's another big move when you put something into production. And I spend a lot of my time in the first spike in the Lassonde curve. But I've had very good success picking companies in the second spike of the Lassonde curve. In fact, one of them is Orla Mining, who Pierre Lassonde is a big investor in. And he put his money late in the development discount window, and now it's, I think, about up 400% for him. That's the kind of moves you get in that second window, and it's much less risky for investors. So it's almost, it can be even more significant than the first part of the Lassonde curve, and longer lasting. And especially if you're really going to be a company builder off of that success. So that's why I'm excited about having you guys in, Jamie. And quite honestly, I don't have enough companies, and I'm not a sole analyst that has that problem. In that second part, that late in the development discount window and heading up that second big jump of the Lassonde curve.
Yeah, I mean, just I agree 1,000%, and that's why we have the Lassonde curve in our presentation. But you know, like we've de-risked it. Exploration risk is removed for us as the earlier part of the Lassonde curve. The technical risk is removed. We got our EA, we got the feasibility studies, robust economics. So what we're missing right now is the funding. And the project financing will be coming, whether from the syndicated banks, from Wheaton Precious. There's a funding gap, and once that funding gap is closed, we will get that move that you're talking about, and that should be soon. And if people want to wait for that funding gap to be removed, they can. But I think now's the opportunity to get in, because, like you said, if it's a 400% move on that funding gap, getting into the development, I think we're trading at about 5 to 8% of our net present value. What I've heard from analysts is we should be trading closer to 40 or 60% of our net present value. So there's certainly some room for us to move higher here. And if we are going to be producing, you know, I think our first 3 years was just under $900 million in profit. You know, if we are able to get this thing built and on time and get those profits, depending on the prices, I mean, you can put whatever multiple you want on it, but we certainly should be trading it higher than our valuation today, which I believe is around 90 or $100 million. So, you know, risk is off in junior mining right now, or development. But when risk is on, I think this is going to be one of the most, you know, one of the most profitable projects that's out there.
Well, and I like to bang the drum hard, Jamie, when we're in that risk, when people are afraid of risk, because that's where the big opportunities are in this business. And I think you guys have one. And I think you're going to be able to keep ticking off all the boxes, because someone once told me, don't go for what someone wants, go for what someone needs. And the world needs what you guys have.
I agree. Thank you. You know, I'm a contrarian investor myself. You know, I just bought some shares a couple of weeks ago, and I'll continue to buy here. So I like value, and I think this is one of the best value projects that's out there. But want to appreciate your time for the interview, and thank you so much. This has been a lot of fun.
I'm going to wrap it up, but we're going to be doing more of these, Jamie.
I love it. That's great.
Awesome.
Keep them coming.
All right, I'll wrap it up. We can talk quickly at the end there.
Okay.
All right, so generation mining, as Jamie laid it out, it's a project that's gone through feasibility. It's a project that the world needs. It's a project that mining needs. It's a project that Canada needs. It's a project that the local economy needs for jobs. These are all the things that I look for, and I'm really excited about having like I said to Jamie, I don't have enough companies in that second part of the Lassonde curve. And I'm not exclusive to that problem. The whole industry needs more of those in various different metals. So I'm really happy to have Generation Mining on as a new sponsor, and we're going to do a bunch of these interviews. I'm going to write a report on them very shortly here, and I'll share that as well. But you know, as always, do your homework, and I think as you do your homework on Generation Mining, you're going to find a very compelling story. And speak with your financial advisors. It's always important to understand your risk profile. And that is actually a point that I want to make too. If you're looking for exposure to mining with less risk, this is what Generation Mining offers as well. So do your homework, speak with your financial advisors. Have a great day, and we'll talk to you soon.